What's going on, guys? My name is Tyler. Welcome back to the channel. And the big question is, did Citadel sell out of $408 billion worth of assets last quarter? If you already know the answer, stay tuned for this because they did liquidate a lot of their positions. They have a lot more closed out positions rather than open positions for last quarter, meaning that they expect some level of market downturn and they are buffering up their balance sheet. But we're going to go over what is exactly being said and really what is going on here. So my name is Tyler. Drop that like on the video, comment down below, subscribe to the channel, and turn on that notification bell so you'll be notified when these videos are uploaded. So first things first, guys, this form was actually deleted because this was confirmed not to be true. Citadel did not sell off $408 billion worth of stock. If we do come to Citadel advisors on the FinTel data, we can see their portfolio has actually went up about $35 billion for the last quarter. So they have definitely been doing very well buying our payment for order flows and manipulating them. That is only my opinion. Do your own due diligence. Nobody's trying to get sued here. I don't know if that is correct or if that is not correct, but that is the running theory here. And I think until we are proven wrong, then I think it's safe to say for my own personal beliefs that that is more than likely happening. But nevertheless, $446,716,850,000. So they definitely have some deep pockets. But take a look at this. Open positions 5. Closed positions 1,550. Now they do still have 13,568 current positions, but you could definitely see a lot of liquidation has taken place, probably a lot of profit taking, and like I said, boosting up their balance sheet. But Citadel is basically in everything. Take a look at this ownership percentage over here. See 5%, 8%, and the list goes on and on and on. So there's no way to really know specifically what they are up to, but I think it's clear that they are getting ready for some kind of market event. And as we do know, as we have come over or went over many times on this channel, if we do see a downturn in the overall markets, that is going to be very good for AMC, essentially squeezing out the shorts of AMC on their short positions as well as their long positions going down in value is definitely a bullish thing for anybody that is waiting for the AMC short squeeze. But if we do come to Citadel's actual position, you can see they liquidated about 80% of their total position, going from almost 800,000 shares now down to only 136,000 shares, while they did increase their put position on AMC. So they definitely have a lot of downside exposure here. So the real question you guys should be asking yourself is, why does Citadel have so much downside exposure, liquidating a lot of positions by only opening 5 new positions last quarter, liquidating 1,500 positions, or closing 1,550 positions? Now, the obvious answer here is, guys, the market is headed for a downtrend in the next couple of months. We just seen over the past couple of days, the Fixed Income Clearing Corporation, they just said essentially that they are not going to be accepting the reverse repurchase agreement treasury bonds as collateral for a lot of their over leveraged positions. So that is obviously a huge red flag in and of itself that is not getting much attention. But we also do have tons of margin calls potentially coming on September 1st, where on October 1st, this is even bigger. Essentially, the amount of money the banks have to keep in their vaults or their reserves is going up by anywhere from about 3% to even 10% on the higher end for the top 34 banks in the United States. Definitely looking for a market downtrend. But essentially, what happens during that situation is that the hedge funds institutions, as we do know, they are the largest bank, or the bank's largest clients. Us with mortgages or whatever, car payments, none of that. We are not the largest participants when it does come down to the banks and their overall balance sheet. So it's the hedge funds and institutions that are going to have to put up more collateral to stay in their positions. They're not accepting the reverse repo bonds anymore. So I think it's clear there is a rush for cash in this situation. Not even as much collateral, but in the sense of cash is king. So let's get into that. Is basically all you guys need to know from that situation. They did not liquidate all of $408 billion worth of assets. I'm sure you guys already get that by now. Their portfolio actually went up about $30 billion. Probably a lot of profit taking as well as just holding on to a lot more cash. Now, let's briefly talk about the situation. And Basically, in every video, there is a comment in the comment section about options being bad for AMC and the short squeeze. And that is 100% the truth, in my opinion. When you are paying this money, let's say the $40 strike for this next upcoming Friday, for August 27th, you're putting up this $64, you're giving that to somebody. Now, if you guys are unfamiliar, the market makers, the hedge funds, institutions, whoever is selling you these options are collecting that premium. If you don't see hedging going on from those market makers, hedge funds, or institutions, they're keeping all of that money. So if AMC only goes to $37, $38, $39, and essentially this $40 strike were to expire worthless, they would keep your $64 and not have to do any hedging whatsoever. So we are essentially giving them free liquidity. But on the other hand of this, guys, when it does come down to the actual gamma squeeze and when the short squeeze does start, options will play a big role in that, just like we did see from June 1st through June 3rd, when options had the majority of the buying power and really caused that move from about $15 all the way up to about $80. So this is definitely a good and bad type situation. A lot more bad here just because we are essentially throwing away a lot of money every single expiration week, where it does come down to 200, 300,000 options expire out of the money. Odds are it's a lot of us apes that are buying those options that do expire worthless. So they are keeping a lot of our money. But when it does come down to the actual short squeeze and gamma squeeze, or the short squeeze, which will lead to a gamma squeeze, or gamma squeeze, which will lead to a short squeeze, we're going to need some options activity and a lot of options activity. So in my personal opinion, I'm not a financial advisor, not a financial planner, or your dad, so do whatever you guys want to do, but I am not buying any options until the actual short squeeze is confirmed or a gamma squeeze is confirmed, where we start to see that information reflected in the data points that we do follow here on the channel. So that is basically all you guys need to know. That's the situation with Citadel. That is the situation about options and them being bad for the short squeeze. Like I said, they're not very good for the short squeeze, but you guys already got my opinion on that. Drop that like on the video, comment down below, subscribe to the channel, and turn on that notification bell so you'll be notified when these videos are uploaded. Also, check out the two links linked down below in the description. There's a link for public, get up to $70 in your choice free stock. It only takes about 3 minutes time to receive your free stock. No need to link bank account or deposit a single dollar. It is by definition free money. Also, check out the link in the description for the buy and sell alerts. That literally pays for itself. Join a great community where we send out alerts every time we make a trade, whether it's a day trade, swing trade, or longer term investment in stock, options, and crypto. So with all that being said, you guys enjoy the rest of your weekend. I will see you in the next video.